Right, hello and welcome to the trade of the day for the 21st of October. My name's Tom. I'm a senior trading analyst here at Trend Signal. And today I want to go through an opportunity that we took on the 14th. It's still ongoing, but we've hit a few targets. I'd like to discuss it, why we took this trade, why we took the targets we did, and talk a little bit more about how you can look to trade the end of day market safely as well. On that note, for a bit of context, we're Trend Signal. We've been teaching people to trade these markets since 2003, based out of the Cranfield Technology Hub at the Cranfield University. So let's jump straight in. We call this the sniper strategy for a very simple reason. The namesake of the strategy is this big sniper disc. Now, I will say this is all that you need to know to be able to trade the system. However, there's a lot more you can learn to obviously kind of tailor these results in and not be quite as paint by numbers. But technically, a trade is valid as long as it has a sniper disc. And there's one other rule: we need the stops to be at least 40 pips away. Otherwise, it's too tight, and normal market volatility could just push you out, especially when the broker spreads go wider overnight. There's a few other factors in here, though. We have this middle line, this vector average change color, as we call it, from red to green to red. We also have the bottom, the same thing, the trend signal line, red to green to red. These are two indicators telling us about the, I suppose, the shorter term momentum in the market. The idea with the strategy is ideally you want to be going in when the train's already left the station. We don't want to jump into a sell trade when it's already pushing against us. Now, with the right circumstances, we can do, but generally speaking, it's to be avoided. It makes it a lower probability position. There's a few other things on here which are telling us stuff about the market. So first of all, we can see that the sniper itself is colored in gray. This is probably the most common sniper that you'll see. It's called a continuation sniper. This middle line here, normally it changes between orange and blue. However, we've been in quite a strong sell pattern for a few moments. But you can see it changes from orange to blue based on the long-term direction of momentum. So this is like, we call this the intermediate trend. It's an intermediate, or if you like, a longer-term momentum setting. We also have the MT and the WT. Now, this is telling us that the monthly and the weekly momentum is moving in our favor. The only thing we actually have missing from here is a favorable charting pattern. It's not been detected by the system, and if it was, it would say CP below it. So now that we have the entry for the system, the question is, how far back do we run it before we say, you know what, we'll eat the humble pie, we'll take the position off? How far do we run it before we go, most of this move is gone and I should get out of the opportunity? We use the TradeMate tool for this. What you do is you enter your account size, your risk size and percentage. It gives you everything you need to know to enter into a broker platform. The stake that you should be using to make sure you're keeping your risk fixed and sensible, your stop loss distance, and the target that you want to run to. Now, we have three different options for the initial stop and two different options for the target that we'll take. Given we have nearly every single factor working in our favor, we're only missing that charting pattern. You'd naturally bias yourself towards looking for an extended trade and managing as the trade goes on. And the only rule for this is we need to have at least 40 pips. The aggressive stop is 31.9, so it's not wide enough. So we go for the semi-aggressive of 43. The way these stop works, by the way, just in case you're curious, the aggressive stop is where the vector average first changed color. The semi-aggressive is the top of the candle where it first changed color, and the passive is the actual kind of micro top that we've seen over the last few candles. In this case, we go for the semi-aggressive. It's 43 pip stop versus a 50 pip extended target. And we actually achieved this on the second full day of trading. So it's the third candle, but we placed the trade on the end of the day. It's 9:30 to 10 o'clock, our trading session. And we moved 50 pips in the space of 2 days. A nice move. If you were trading at a pound a pip, it's 50 quid. £3 per pip is 150. But technically, this trade is still live. The total move that was possible, and no one's ever going to nail this perfectly, but so far, it's in the region of 101 pips. So again, trading at a pound per pip, if you did time that very well, you could be looking at 100 quid or 300 quid from £3 per pip. This trade will ultimately come to an end using the same indicators that got us in the first place. When this vector average turns back to green and this trend signal line turns back to green, essentially what we can see is that the movement's gone, the train's arrived at the station, we're now moving into a buyer's market, and the question you need to ask yourself is it a smart idea to hold a trade that you're selling in a buyer's market? The answer is no, so it's what we call an active stop. These will come sooner rather than later, but then make sure that you don't get too greedy and try to hold these positions forever. If you want to find out more about this trading strategy, how to trade it, and actually get some trades that you can put onto your account for yourself, we host a couple of sessions trading the markets with this live a week. Now, we actually have one tonight at 7 o'clock. There'll be a form around this video. Come and join us. We take questions the entire way through. And aside from learning how to trade these markets safely, hopefully we can make you a little bit of money as well. Hope to see you there.